Euro to US dollar is sitting right on the 1.14 pivot, bears still in control, but the 1-hour chart is screaming buy. A massive trap is forming. Here's the danger: a false breakdown to grab liquidity at 1.1350. Here's the opportunity: a scalp long above 1.1416 that targets 1.1453 within the session. Full breakdown with 2 scalping entries and 1 swing trade. Link in the description and pinned comment. Tap to watch now. Listen closely. The euro is up 0.5% this morning, yet the weekly and daily trends are screaming strong sell. That is a textbook trap, a rally inside a bearish structure, designed to lure in breakout chases before the real liquidity grab. There is one danger zone and one hidden opportunity right now. I'll show you both. Right now, euro to US dollar is trading at 1.1435. It has just smashed through the first pivot resistance at 1.1416, and it's accelerating. Retail traders are piling into shorts because the daily trend says sell, while the smart money is positioning for the squeeze. Stay to the end. I'm giving you 2 scalp plays and 1 swing trade you can execute today. Write this down: MY session bias. We are fading the rally, but only after it exhausts itself into the 1.1453 to 1.1480 resistance zone. Right now, the short-term momentum is bullish. The 5-hour and 1-hour trends are both strong buy. That means the path of least resistance for the next few hours is higher. But the daily and weekly sellers are sitting right above us, waiting. The single invalidation level that flips my bias from cautiously bullish to aggressively bearish is 1.1352. Write this number down. If we break below 1.1352 today, the entire intraday structure resets and the daily sell trend takes over with a vengeance. That level is the S1 support, and it coincides with yesterday's value area low. A break below it opens the trapdoor to 1.1325 and then 1.1288 within 24 hours. Here's what matters about the herd. The Commodity Futures Trading Commission data shows speculators are still net short the euro, but the positioning is crowded. When everyone is on one side of the boat and price starts moving against them, the pain trade is a short squeeze. That's the fuel for a pop towards 1.1480. The dollar killers, the euro and cable, are both showing similar patterns this morning, a bounce against a dominant dollar, but the bond spreads tell a different story. The US 2-year yield is holding firm above 4.8%, while the German 2-year is barely budging. That spread is keeping a lid on any sustained euro rally. So my base case: a grind higher into resistance, then a sharp reversal. Let's walk through the charts, top down. Start with the weekly. The weekly trend is a strong sell. Price is below the MA20 at 1.1463, below the MA50 at 1.1543, and well below the MA100 and MA200, both hovering around 1.1596 and 1.1567. That's a wall of moving averages clustered between 1.154 and 1.16. Every one of those is a brick in the resistance ceiling. The weekly MACD is negative. Histogram still bearish. No crossover in sight. That tells you the multi-week bias is down. Period. Drop to the daily. Daily trend is also a strong sell. Price is currently poking above the MA5 at 1.1407 and the MA10 at 1.1422. That's the first sign of a short-term momentum shift. But look at the MA20 at 1.1463. That's sitting right on top of a 2 resistance at 1.1453. A convergence of dynamic and horizontal resistance. That's the zone. Daily RSI is at 42.8. Not oversold, not overbought, still in the bearish band below 50. That tells me there's room for a bounce before the sellers reload. MACD on the daily is at minus 0.006, still negative, but the histogram bars are shrinking. That's the early stage of a momentum slowdown. Not a reversal yet, but a warning that the bearish energy is fading. Now here's what most traders miss: the 4-hour chart. The 4-hour trend just flipped to strong buy. That's a lagging signal, but it confirms the intraday shift. Price has climbed above the MA20 on the 4H, and the MACD just printed a bullish cross. The signal line has crossed above the MACD line. It's early, but that's the moment institutional algos start covering shorts and flipping to tactical longs. The 4H candle is currently pressing against that A2 at 1.1453. If it closes above that, the next stop is a 3 at 1.1480. And that, my friends, is the mother level. 1.1480 is the daily pivot resistance, the top of this week's range, and the level that, if broken, would trigger a full-scale short squeeze towards the MA50 at 1.1543 down to the 60-minute. The 1H trend is strong buy. The MA5 and MA10 are sloping up aggressively. Price is above them. The 1H MACD is pointing straight north. ADX is at 27, which tells us there is a trend forming. It's not yet extreme. CCI is at -20, which means we are coming out of a brief dip and re-entering a bullish momentum phase. Stochastics are at 43 and rising, plenty of room before overbought. So the short-term mechanics are aligned for a push higher. But, and this is the second trap, the ATR is only 66 pips. That's a relatively low reading for euro to US dollar. It means breakouts can be false, and whipsaws are likely. This is exactly the environment where the liquidity grab scalping setup prints money. The key levels are laser clear. Support, 1.1352, 1.1325, and the final line in the sand at 1.1288. Resistance, 1.14. 1.6 is now intraday support, then 1.1453, then the big wall at 1.1480. The pivot point of the day is 1.1389. That's the equilibrium. As long as we stay above 1.1389, the intraday bias is bullish. Fall below it, and we are back in the chop zone. Cross us at linkage. Keep your eye on the dollar index. It's grinding towards 105. If it breaks that, euro to US dollar cracks 1.1352 fast. Also, gold is stalling at its own resistance, which suggests a risk-off undercurrent. If gold starts dropping, that's dollar strength, and that will punish any euro longs. So I'm watching the correlation like a hawk. The 24-hour headline is blunt. Euro to US dollar bears hold control while 1.14 becomes a key pivot. And that's exactly what we are seeing. The news flow is thin today. No top-tier Eurozone data, no major US releases. That means the market is trading purely on technicals and positioning. And that's when the traps are most deadly. But the deeper narrative is the bond spread battle. The 2-year yield differential between the US and Germany has widened again this week. The ECB tried to sound hawkish last week, but the market isn't buying it. The US economy is still running hotter, and the Fed has zero incentive to cut. That divergence, the dollar killer instinct, is capped. Every time the euro rallies on a whisper of ECB tightening, the dollar bulls use it as a sale opportunity. That's why the daily trend is so persistently bearish. Then there's the risk asset shadow. Bitcoin is struggling below a key moving average. S&P 500 futures are flat, and oil is choppy. No clear risk-on euphoria to lift the euro. So the euro's bounce today is purely a positioning squeeze, not a fundamental re-rating. That means it's vulnerable to MY1 to 2-week directional lean. We drift lower towards 1.1325, possibly 1.1288, unless we get a daily close above 1.1480. That closes the bearish structure on the daily and opens a run to 1.16. The exact invalidation of my bearish medium-term view is a daily close above 1.1480. If that prints, I'll flip to a buy the dip mode. Now for an interaction trigger. Do you think the dollar index breaks 105 this week? Comment yes or no. I'm tracking consensus. The herd's answer here tells us a lot about sentiment extremes. Most people skip this section. That's exactly where the money is made. Keep watching. I'm about to hand you 2 scalping strategies and 1 swing trade with exact entries, stops, and targets. Strategy 1, the opening scalp, scalping, high probability. This is the fast snipe for the London session. The level we are watching is 1.1416. That was the R1 resistance that just broke. Resistance becomes support. The trigger. Price must pull back to 1.1416 and print a bullish engulfing candle on the 5-minute chart, or a solid pin bar rejection with the wick piercing the level and the body closing back above it. If that sets up, you go long with an entry at 1.1417, just above the high of the confirmation candle. Stop loss is tight at 1.1405, just 12 pips below, beneath the MA10 on the 1H and below the noise of the last few 5-minute swings. Take profit 1 is at 1.1450, right under the R2 resistance. That's a 33 pip target, offering a risk reward of 1 to 2.75. If momentum is ripping, trail the stop to break even at 1.1430 and aim for take profit 2 at 1.1475, just ahead of the R3 wall. What instantly voids this scalp? A 5-minute candle close below 1.1410. If that happens, the support break is a fakeout and the bears have reasserted control. You stand aside. The opening SCLP entry, 1.1417, 5M bullish engulfing after pullback to 1.1416, stop loss, 1.1405 take profit 1, 1.1450 take profit 2, 1.1475 risk, reward, 1:2.75R, to TP1, invalidation, void if 5M candle closes below 1.1410. Strategy 2, the liquidity grab, scalping, counter noise. This is the stop hunt play. The most obvious place for a liquidity grab is just below the pivot point at 1.1389. Retail traders will have stops clustered just under that level and under the S1 at 1.1352. The market loves to run those stops before reversing. Here's the setup. We need to see a fast spike down to the 1.1350 zone, maybe a wick that touches 1.1345, and then an immediate snapback above 1.1389 within the same 15-minute candle or the next one. That's the trap. The market just took out the week longs, and now the smart money is buying your entry trigger after the reclaim, a 15-minute close above 1.1392. That's 3 pips above the pivot, confirming the stop hunt is over. Stop loss goes just below the wick, at 1.1340, 15 pips of room. The target is the nearest liquidity pull, which is the resistance at 1.1430, a 50 pip move from the entry, giving you a risk reward over 1 to 3. Don't get greedy on this. Grab the liquidity and get out. This requires fast execution and a calm hand. If the snapback fails and price lingers below 1.1380, the trap is a real breakdown, and you don't want to be long. The liquidity grab entry, 1.1392, 15M close above pivot after wick to 1.1345, stop loss, 1.1340 take profit 1, 1.1430 risk, reward, 1:3.0R invalidation, void if 15M candle closes back below 1.1380. Are you scalping or swinging this week? Comment scalp or swing. I want to see where this community sits. This is pure market psychology data for me. Strategy 3, the session swing, trend alignment. Now the trade that puts you in position for a multi-day move. The daily trend is still a strong sell, but if the 4H and daily can align, a high reward swing short or long presents itself. Right now, the high probability swing trade is actually to the upside, but only on a confirmed breakout. The trigger condition, a 4H candle close above 1.1480. That's a 3 and the level that has capped this pair for 3 weeks. A close above there triggers a structural shift from a bearish daily trend to a bullish breakout. The MACD on the 4H is already bullish, and a break above that wall means momentum has flipped on the daily 2 entry. Go long at 1.1485 after the close confirms, with a stop loss placed outside the daily structure at 1.1410. That's a 75 pip stop, wide, but necessary to survive the noise. The conservative take profit one is at 1.1560, just under the MA200 and a major structural level. That's a 115 pip move, giving a risk reward of 1.5 to 1. The stretch target, take profit 2, is at 1.1630, capturing the next liquidity void above the moving average cluster. Once price reaches halfway to TP1, around 1.1525, move your stop to break even. Then trail it by 50 pips. The explicit invalidation level for this swing, a daily closeback below 1.1410. If that happens, the breakout has failed and the bearish trend resumes with force. This swing trade aligns the 4H momentum with a potential daily reversal, and it's the kind of setup that catches 200 pips while the herd is still trying to short every bounce. The session SNG entry, 1.1485, 4H close above 1.1480, stop loss, 1.1410 take profit 1, 1.1560 take profit 2, 1.1630 risk, reward, 1:1.5R, TP1, 1:2.2R, TP2, invalidation. Void if daily close below 1.1410. Never risk more than 1 to 2% per trade. Scalps demand even tighter risk. These are fast, high leverage plays, so position size accordingly. No positions through high impact news. If a red folder event drops, pull your orders. Stops are non-negotiable. I don't care if you think it'll bounce. Put the stop in and let the market prove you right. This is how you survive to trade the next big move. And there is always another move. The single most critical level for the next session is 1.1480. Burn it into your screen. If price breaks above that on a 4H close, the entire bearish structure that's been in place for weeks cracks open, and the monthly trend could shift from neutral to bullish. That's a monster move in the making. Tomorrow, we've got US ISM services data dropping. If it comes in hot, the dollar spikes, and that could smash the euro right back into the 1.1350 support. I'll be here with the updated blueprint 24 hours from now, mapping exactly where the liquidity pools have reset. If 1.1480 breaks, the whole monthly trend flips. I'll have the new levels before anyone else. If you want the full breakdown on Aussie dollars and Japanese yen, the video are live now, tap the end screen. I've got the exact gamma levels that will define the next 5% move in the SPX. Then hit the bell so tomorrow's alert lands before the Frankfurt Open. The morning gap is where fortunes are made or lost. Hold the like button until it's fully blue. Every signal helps the algorithm bring you the levels that matter, the ones that actually move your account. Subscribe if you haven't already. Daily 8-asset institutional coverage, no fluff, no reporter talk, just the levels that make a difference. And one last thing, that 1.1400 pivot is the magnet. When everyone sees the same level, the game is about who gets trapped. Don't be the liquidity. Be the one who trades the trap. See you next Monday.